We're buying AXA IM Sterling Credit Short Duration Bond Fund. It's an alternative to cash. It's a lower risk profile and has a natural liquidity in an asset class that is fairly illiquid. It has a great 5-year track record, and of the 60 months it's been running, only 14 have been negative. 12 of those have beaten the peer group. We are buying Kane's Global Diversified Growth Fund. Although it's a new launch in the UK, it's actually an existing strategy offshore, been running for many years. Most importantly, we have great access to the team, both in Edinburgh and in The Hague. As a founder investor, we've negotiated unique terms for our clients. Their aim is to produce a return of 4% above inflation over one business cycle. Not only will it be a good diversifier within the alternative asset class, it's a good diversifier of portfolios overall. We're buying Franklin UK Rising Dividends Fund. This is replacing the Neptune Global Income Fund within our income portfolios. The fund manager has 20 years of experience of running money for income purposes. This is a relaunch of an existing fund back in January 2015. The strategy has worked extremely well in the US and should be adopted extremely well here in the UK. Most importantly though, as it is a competitive asset class, Franklin have reduced their charges to only 55 basis points. We are buying Jupiter Asian Income. This is a new fund that was launched in March, but there's an old hand at the tiller. Jason Pidcock, who left Newton in the summer last year, joined Jupiter before Christmas. You may recognise Jason as we've been invested with him since launch of the portfolios in 2004. We have extremely high expectations for this manager, someone we know inside out. We've never seen him this exuberant, and we expect this fund to be an extremely good performer. We're buying Legg Mason Japan Equity Fund. This will be our only fund in our allocation to Japanese equities. The fund itself has been running for 20 years, and interestingly enough, has no Japanese investors. The only investors are European, mainly UK. The fund itself also runs on 3 main themes: the internet, an ageing population, and medical and healthcare. We are buying Fidelity's Global Enhanced Income Fund. It's the sister fund to the UK Enhanced Income Fund that we already own. What you're buying is the Global Dividend Fund itself, but with a derivative overlay to increase the amount of income you receive. 50% of the stock they own is loaned out. For that privilege, people pay a premium. That premium increases the amount of income you receive to roughly an additional 1%.